Okay, so in this video, we're going to talk about the best index funds to invest in. So guys, what an index fund is basically, it's a broad fund that trades on the stock exchange of a mix of many different companies. So it's like a big basket of companies. So instead of buying like individual stock in Amazon or Google or Tesla, you own basically all of the stocks market. So it's just a nice way to invest and kind of be diversified. So if you guys need to learn the difference between stocks and mutual fund index funds, please check out the video I posted previously. You guys can get that link in the description to learn more. So let's get right into it. Before I talk about the best funds, why should you invest in index funds? Because I think sometimes people aren't really sure of the benefits. So I just want to quickly go through them and I'll quickly show you the best funds. So first of all, index funds are easy to understand. It's much easier to understand owning basically all the stocks in the US stock market instead of one individual stock. Index funds are liquid, so you can easily sell these funds very quickly back into the market, get your money back. They're passively managed. So they're passively managed, which means they're not being there's not a lot of active trading going on between the index funds, which means that your costs are lower. Low turnover, like I mentioned just earlier, basically the funds don't turn over nearly as much, so lower costs. Easier to get started. Anyone can easily put money into an index fund. They don't even have to understand much about investing in stocks individually. You can easily just set your account up and take a portion of your paycheck every month, purchase into the index fund, set it and forget it. So less risk. So of course, yes, while gains are usually lower for index funds, there's also a lot less risk. So if you're just looking for a low stress way to invest your money without worrying about individual stock prices, and best believe me that stock prices do fluctuate a lot. If you don't have time for that, or you're much older and you want to just earn a conservative return and preserve your money, index funds are a great option. And then finally, great for long-term games. So if you have a long time frame, if you don't plan to retire for 20 or 30 years, or you have kids and you want to set up kids for a UTMA or something like that, then index funds is a great option. Okay, so there are lots of different index funds out there and many ETFs. That this video is basically about index funds. So I'm going to give you guys the top 3 options. And all of these options are investing in the US stock market. So yes, there are a lot of emerging market index funds and real estate index funds as well, but I think that most people, when they want to buy an index fund, they're interested in stocks, not not Asian companies, and certainly probably not real estate. So here are my 3 recommendations, guys. The first one is the Fidelity Total Stock Market Fund under the ticker symbol FZROX. So this is my favorite one because it's 100% free. You don't have to pay an expense ratio. This index fund, I believe it launched less than 2 years ago. So this is the one I'm personally using. I'm using this one for myself and my IRA, and I use it also for my kids' trust. So for me, it's free. I just put money in it. So I want to talk a bit more about it, guys. So let's go into more and like deep dive into it. Okay, so this is the Fidelity Zero Total Market Index Fund. This is my favorite fund of choice right now. So actually it hasn't been doing well as of late because due to the whole dip in the markets and stuff like that. But the fund has only been around, it's been around less than 2 years, and it has a very low turnover rate. And best of all, no minimums to invest and no expense ratio, 0. So Fidelity kind of revolutionized the industry just like Robinhood did with free trading apps. Fidelity was basically the first major investment firm to come out with free index funds. And the reason why index funds should probably be free anyway is because, guys, when these companies like Vanguard and Schwab and Fidelity and T. Rowe Price and all these companies, when you put money in their accounts, they're using your money and making money off of things like the bid and the ask when they trade, and they also have access to your capital, so they're able to get involved in other things like lending and stuff like that, and basically making money off of your deposits. So there really isn't a reason they should be charging you a lot of fees. It's basically been one of the biggest scams on Wall Street for a long time, and it's just kind of nice in this decade to see companies kind of move more towards what Robinhood did and just offer us free options. So this is why I like this fund. Basically, I like it because it's free. It's 100% free. So even though most index funds have very low costs, I just don't see why I should pay when I can get something for free. So as you can see, 20% of the holdings are in Apple, Microsoft, Amazon, Facebook, JP Morgan, Berkshire, Google, Johnson & Johnson, and Visa. So these are all excellent companies, and a lot of these companies are not only very big in the US, but very big around the world. They have offices all over the world and lots of international customers as well. So this would probably be definitely my top choice. No minimum to get started and no expense ratio. So that's my favorite one. Now I want to go to my second favorite one that I mentioned, which is the Schwab Total Stock Market Fund. So I know a lot of you guys aren't on Fidelity. Maybe perhaps you're on Charles Schwab. They're another popular one. So this fund's been around a lot longer. It's been around since 1999, and it has a much higher expense ratio, of course, and it has a slightly high turnover. But for you guys interested in a fund, it just seems to have more established or something like that, even though it's not free. This fund's been around a lot longer and has a lot more total assets. So as you can see here, the expense ratio is, okay, it's not zero, but there's still no minimums, and it's still a large blend. So it has over 3,000 holdings, and let's see if it has a lot of overlap. Yes, of course, basically has lots of the similar holdings. Microsoft, Apple, Amazon, Facebook, Berkshire, Google, JP Morgan, Johnson & Johnson, and Visa. So this is another option, guys. I don't have an account with Charles Schwab, although I know a lot of people like their offerings. So this would be my second choice. I would say Fidelity would be number one. Then my second choice would be Schwab. And then I want to give you guys, oh, the ticker symbol is SWTSX. So that's option. And then we give you guys a third option. So the third option that I mentioned is Vanguard. Now the reason why I don't like Vanguard nearly as much as the other two is because I think Vanguard has the highest minimums in the industry, and also Vanguard is kind of like a cult type company where they charge you a lot of money up front to get started with them. And I don't know, I used to have a Vanguard IRA. I actually moved my Vanguard IRA to Fidelity because I just didn't see the point in maintaining it and paying fees and with these high minimums and things like that. I mean, it's not very high, but I'll get more into it. So as you can see, while the page is loading, this is the Vanguard Total Stock Market Index Admiral shares. They actually have another total stock market fund, but it's actually closed right now. So this is the only one you can invest in. So this one has been around since 1992. So it's even older than the oldest total stock market index funds out there. But the thing I don't like about it is that it has a minimum investment of $3,000. So and for me, I just prefer the Fidelity free zero. But for you guys that have more than $3,000 to invest and you like Vanguard, Vanguard's been around a very long time. They have an excellent reputation. It's started by the late John Bogle. He wrote a couple books that are pretty famous, talking about index funds for a long time. And I just take a look at this. Basically, as you can see here, take a look at some of the funds, holdings, and things like that. Schwab does 351 and has a much larger net asset value because it's been around for so long, $840 billion. And let's see if it has some of the similar holdings. Basically, Facebook, Berkshire, Johnson & Johnson, JP Morgan, Visa, and Procter and Gamble. So this is kind of the one of the oldest index funds out there, guys. So with a very well-established company with an awesome reputation, and you don't mind investing $3,000, I would go. I just want to go back to give you guys a recap. So you guys, if you want to take notes or you want to search these index funds individually. So basically, these are my top 3 recommendations. I'll go over them once more. The Fidelity Zero Total Stock Market Fund, ticker FZROX. The Schwab Total Stock Market, ticker SWTSX. And finally, with the 3K minimum, but one of the older ones out there, Vanguard Total Stock Fund Admiral shares, VTSAX. So I hope this answered you guys some nice options on to invest in index funds. So if you guys enjoyed this video, please give me a thumbs up and subscribe to my channel for more content. And if you guys have any more questions, just leave them in the comments. Oh yeah, have you gotten your free shares? This video is about index funds, but I think it's pretty cool that Webull are giving away free shares of stock. So if you guys are interested in that offer, to download their apps and get some free shares of stock, just click the link in the description below. So that's it for now, guys. I hope you enjoyed this video and take care.